Hi, welcome back to another edition of Lipper's Fund Flows Insight. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows for the weekend of Wednesday, August 15th, 2018. We actually had outflows this week of only about $1.7 billion, fourth week in five that we've actually seen outflows. But this was kind of I'm going to say a subdued outflow week if you consider what's going on. I mean, in the headlines, we had two major things going on. Obviously, the tit for tat that's been going on between the United States and China as far as trade goes. But then also we started hearing about an increasing problem with the Turkish lira. They're right in crisis territory. Year to date, they're down about 40% against the United States dollar, and really caused some havoc. Highlighting, if you will, spotlighting the problems people are worried about contagion and emerging markets and international investing as a whole. So that's kind of where it came from, where we had it. But again, no big outflows. Well, $1.7 billion is really nothing. So I think investors are kind of sitting back on their hands. But let's see how these news information actually panned out to our flows group. Let's take a look at our macro groups right now. Take a look. Basically, we see that the equity funds lost about $920 million. Again, nothing to write home about. Taxable bond funds took in a little bit over a little bit less than $1 billion. And then we saw muni bond funds taking $388 million, and then money market funds lost about 2.2. So really just an even keel week overall. I mean, nothing really to write home about. Let's go ahead though now and take a look on a basis by basis breakout for each of the macro group breakouts. Let's take a look at equity funds first. If we take a look at this group, we find out that they had a 2.16% loss as far as returns go. Second week in three that they've actually had downside performance, and that actually caused about a $920 million outflow. Eighth consecutive week we've seen outflows out of that group. And how it broke out is that we saw domestic equity funds lose about $967 million. 13th consecutive week they've lost money. They had a 1.45% loss as far as returns go for the week, but ironically, the non-domestic equity group only took in $48 million, but still was on the plus side. Second consecutive week, they've seen that new money come to the group, but it's the third consecutive week they've witnessed losses, and this time to the tune of 3.63%. So when you have a doubling or even a tripling of losses, it does become a head-scratcher how people can keep investing. Now, on the flip side, maybe they're getting to that old thing of, buy low, sell high. That'd be great if we saw that as a pattern breaking out. If we take a look, though, take a closer look, we see large cap funds actually was the pariah of the group, losing about $652 million. If you've been listening to Pat and me over the last several months, that's actually a very small amount. And then we saw global equity funds actually take in about $276 million, and we saw the international equity funds lose about $225 million. So that's kind of how we netted out there. Let's go ahead now and take a look at our ETF universe. Basically, we saw for the fifth consecutive week ETF funds, equities, take in new money, this time only to the tune of $281 million. At the top of the group, we saw the iShares Core S&P 500 taking about $1.5 billion. SPY, the Spider S&P 500, took in about $1.1 billion. And at the bottom side of this, we saw the Financial Select Sector Spider lose about $694 million, and Spider Dow Jones Industrial Average lose about $504 million. Well, that takes us now to our fixed income universe. First, we'll take a look at the fund side of the universe. We see for the fixed income group that for the second consecutive week they took in money about $1 billion. It's the second week in three that actually taken in net new money, although they did have a negative performance about a 0.35%. Corporate investment grade debt funds took in the majority of the money, $1.9 billion, followed by government treasury funds in a distance, only taking in $71 million. And then at the bottom we saw flexible portfolio funds hand back about $452 million, and balance funds lose about $301 million. Let's turn our attention now to the fixed income side for the ETF universe. In this group, we saw that they actually saw net redemptions. $237 million money came out of that group, but a second week in three that we've seen net redemptions out of this group. If we take a look, though, the iShares Core U.S. Aggregate Bond Fund actually took in about $181 million, very low numbers. iShares 1 to 3 Treasury Bond Fund took in about $132 million, and at the bottom of the group, we saw the iShares iBox Investment Grade Bond ETF handing back about $775 million. Well, that takes us to our Muni bond fund group, and they've been positive. $388 million in net new money came into the group. Second consecutive week they've taken in net new money, and the second week in 3 that they've had positive plus side returns. This time to the tune of 0.23%. On a weekly basis, that's pretty good for Muni bond funds. If we take a look, though, high Muni bond funds basically took in about $241 million, and then we saw the intermediate municipal debt funds taking money as well, about $83 million. And then if we take just a quick snapshot of what happened on the ETF universe, we see $64 million came into that group as well. So it was just kind of a good week for Muni bond fund as far as inflows in ETFs. Well, now let's turn our attention to money market funds. And I told you they had a outflow. It's the first week in 3 we've actually seen net outflows, and this time it was the tune of $2.2 billion. And how that broke out is taxable money market funds took in about $1.7 billion. But then we take a look at, lost $1.7 billion. And then if we take a look at the tax-exempt money market funds, they lost about $493 million. When we take a look at the taxable bond funds, this is how it broke out. Basically, we saw institutional investors take out about $2.9 billion, while retail investors were padding the coffers of money market funds, injecting about $1.2 billion. Well, that's it for me, but I'm kind of curious of what's going to happen over the next several weeks. Basically, we had some, I'm going to call it pretty good news that we heard. Industrial production came in. It was flat. About a 0.1% increase. I think investors were expecting about a 0.3% increase. But really, if you take a look at the numbers and get kind of down to the core numbers, they were actually pretty solid numbers, and just showed you that we're just tooling along as far as the economy goes. But what was maybe even more surprising is that the retail investors for July, actually retail sales actually grew about 0.5%, and that's against what was expected, about 0.1% growth. And it just shows you that the tax cuts are starting to work. That the economy is tooling along. The high unemployment numbers that are doing it just really is working out well. So even though we've had some of the kind of a disastrous news as far as the Turkish lira go, and we're all looking forward to emerging market issues because we have Brazil having its primary election in October. People are concerned about what's happening on the global economy. But as we take a look back and take a look at the U.S. economy, we see that's tooling along quite well, and that might bode well for flows going forward. Well, if I haven't done a deep enough dive for you and gone into some of the areas you'd like to take a look at, please visit our site at www.lipperusfundflows.com, or join us next week where one of our analysts will talk to you about the flows of the week. Thanks for joining me. My name is Tom Roseen, wishing you the best in your wealth planning and creation.